So first things first, dollar index. How have we actually chosen to trade? Let's first off start with our yearly time frame. Our current yearly candle traded back into this yearly fair value gap. We're more likely than not within this region of price. More likely than not, we are going to see some sort of reversal point, being a certain price within this region being actually put in, or some sort of significant low, which it's reasonable, probable to say that this is where the low is very likely to actually be, which is the case as of now in lifetimes. We've had this completion as well of this higher time for the AMD framework. We've had this consolidation in our previous year. We've had that clear manipulation and that finalization of the expansion to the downside, where we've obviously swept such significant levels such as our previous yearly low, adds to the factor that more likely than not we are going to see some sort of reversal point being put in within this region of price in our yearly fair value gap, and some sort of higher time frame retracement over the next couple of weeks and potentially months, etc. Coming back into this expansion to the downside, lots of inefficient price action. We could potentially even see a run into the premium of this leg. Going on to the daily time frame, just assessing how market participants have chosen to actually trade price within the region of where a reversal is most likely, and this retracement on a higher time frame is extremely likely. You can see, when we purge this low, this is where the more and more our weekly candles have actually become predictable, that more likely, yes, this is going to take place, and yes, we are going to start to see higher prices for the dollar index. You can see, price starts to slow down. The prices are actually being traded weak, the overall range and pip size. You see this wick rejection to the lows of this candle that we've seen this week, and then we've seen this push up strong to the upside above this previous weekly high here. And then going on to this week, what can we actually take from here? Say that more likely we are going to see some sort of higher prices on the dollar index if it aligns with our 10-year bonds, which it is. And I'll get on to the analysis on that in a little bit. Dropping down the time frames a little bit here. See, so what's significant? How does higher prices actually become predictable in the first place on a higher time frame as a whole? Why is this bias, and how has the bias actually been constructed, and why is it probable? So obviously we're trading in this region of price where more likely than not this reversal is actually going to take place. Here, this is where we've seen this displacement to the upside in some of our previous weeks. Now, what's actually very critical to actually outline is what region of price we actually have displaced. Now, it's our new weekly opening gap here at Thursday the 7th. Now, you can see, the way market participants have actually chosen to trade prices. We've had this range of engineered highs here, where more likely than not we're going to see a run into our weekly fair value. Exactly what we got. Market participants have continued to show intent that they're going to push price higher, and it's very obvious that the dollar index is going to trade higher to rebalance and restore equilibrium within the markets. Outlining as well, EU and GU actually didn't manage to purge its previous weekly low. Yeah, you've seen this engine liquidity within this region of a high probable retracement back into the high probable on the E as well. Going on to trade, I'll move on to the 10-year US bonds. See the way that we've actually chosen, that market participants have actually chosen to trade the 10-year US bonds. Left this fair value gap, and you can see quite clearly the wick rejection. Those we've seen this push up, and then in our current monthly candle, we've seen somewhat higher prices making a run, or ultimately potentially some levels of the to the upside. Now, dropping down the time frame a little bit more, we've shown push prices higher from the fair value gap again, within our previous week. And now what's significant, what have we got left behind? It's the daily fair value gap, where more likely than not, due to obviously showing signs of bullishness from this gap here, expecting our parameters here, we can actually take away that more likely than not market participants are going to continue to push higher. So this aligns nicely, obviously, with the dollar index, where, in previous weeks we had this huge expansion to the downside, where, like I said, equilibrium does have to be markets. Just reviewing GU as a whole as well, starting off the daily time frame, you can see actually purged this significant level of liquidity, where what can we actually take away from it? Take away any price being traded above this level here. This is where we're likely to see some sort of reversal actually put in within the markets, a certain price put in, and that's exactly what we've actually had here our previous week. Dropping down the daily as well, see 4 hour, see we've had this range of engineering here, then we've had the purge. Now what this range of engineered liquidity just below our significant level does, adds to the probability factor that more likely, yes, we are going to actually, this retracement is going to actually happen soon. The market is ready to actually down for GU, and this aligns nicely, as mentioned, with the dollar index. So what happened in our previous week, showed signs and intent to actually lower. We've disrespected this daily fair value gap here, to the left here, and what is actually left behind. Now, what's critical is firstly the economic calendar. You can see on Monday actually got bank holiday, Tuesday as well. Been shown, quite simply here, had this clear engineering of liquidity in line with the high probable, tracement back into this high probable draw of liquidity, our weekly fair value gap. Now, what can we actually take away from this push up here? We can take away that more likely than not, this is going to be our manipulation for the week, where high of likely to be put in. Now, it's likely to be put in, obviously purge this high here, reversal point likely. This strong draw liquidity is likely to be hit, and it's likely to be hit this week due to the overall range and distance, very close to it. Dropping the time again, see on the hourly, the way we've actually chosen to trade post tapping into this daily fair value gap, shown clear signs of bearishness and intent to lower by this fair value gap here on the late Tuesday. Going into today a little bit, just ranging this daily fair value gap here, our news driver actually comes into play. This is where we actually start to see our move in line with where our take profit actually is, and where the most likely drawn, where the weak candle is likely to expand be as a result of what I've actually picked up upon in the video. Going on to the take profit a little bit as well, see where we've actually engineered this low here by trading above this level of price, by also leaving this inversion daily fair value gap aligns nicely with time as well. Tuesday, this is where we're likely to see a high actually be in, just adding simple confluences to actually choose to execute this trade with first place.